Consumers are still feeling the impact on their wallets. With fall football season on the horizon, college football getting underway this week, Americans are eager to get out for the games. But there is a new Wells Fargo report revealing that higher gas prices, airfare might stop a fan or two from heading out to that pregame at tailgate. Wells Fargo economist Michael Pugliese joins us now. Michael, let's just start with what we're seeing: gas prices, airfare tickets. How much more are people going to pay this year? And how do you think, if at all, it's going to affect attendance?
Yeah, well, like you said, you've certainly seen some prices increase pretty substantially. Gas prices being the big one there, even despite the relief we've seen over the past couple months, still up substantially on a year ago basis, quarter or a third or so. Airfare prices up pretty substantially. If you look at grocery prices, they're up about 13% from a year ago. That's the fastest increase we've seen since 1979. And for some tailgating popular items, chicken, beef, snacks, some others, we're talking 15, 20% year over year gains. So, I do think that's going to squeeze some of that game day experience. Now, I think attendance will still be pretty good. We've still seen pretty robust demand as consumers have shifted towards more services spending and less goods spending now that we're a lot further away from the pandemic. But it certainly does act as a squeeze given those higher costs.
Yeah, NFL attendance is probably fine. College football is a whole nother animal. We'll talk about that later in the program. But you talked about chicken and the inflation there. So let's get down to substitutes, because that's what sports is all about. If you're going to sub out chicken, what's the play?
Yeah, I think a couple of things I'd point to is grab a hot dog. Those are only, and I kind of use air quotes there, only up about 5% or so over a year-over-year basis. Or if you're looking for maybe a healthier option, fewer calories, turn to fresh fruits and vegetables, where you've seen inflation in that sector that's kind of more in line with the overall CPI, something more like 5 to 8, 9% in that range, and not those, higher double-digit numbers I just talked about, like chicken and beef and chips and pretzels and some of those other snack-like items.
What about when it comes to, Michael, actually firing up the grill and the gas that's involved with the charcoal? We're seeing inflation there.
Yeah, absolutely. It's not just the cost of getting to the game with that gasoline, but also fueling up the grill, propane, firewood, the kinds of things you'd need to fire that up. We're talking even there, 20% or so inflation on a year-over-year basis. So those costs really do stack up when kind of adding them all together.
I'm not sure how popular you'll be if you're the one bringing the fruit and veg plate to a tailgating party, but one interesting thing we saw was pickles and relish, the inflation on that being so incredibly high. What do you attribute that to?
Yeah, it's really just across the board. When you look at a lot of different sectors, either agricultural commodities being up a lot, labor costs, which continue to be very high, transportation costs, which continue to be high. You also see a lot of volatility in these, like we've seen in all the inflation data. Each individual subsector has been very volatile as different problems in the supply chain have caused that volatility over the course of the past couple of years. So you kind of pull all those factors together, and it doesn't surprise me that even somewhat random sectors have seen really robust inflation over the past year or so.
Mike, what about if you want to stay at home, you want to watch it on TV? The cost of upgrading your TV actually isn't that bad. Something that stuck out to me in your report. Break down, I guess, the exact numbers of this, because it could make sense for a lot of people out there to just stay home.
Yeah. So, if you are trying to get to the game and transportation is a challenge, be it driving with gasoline or airfares, what I would point you to is public transit. Take the bus, take the subway if you can. But if you're choosing to stay at home, I think that's a great point. You've seen TV prices actually come down a bit relative to a year ago, continuing what's more of a longer term structural trend there over the past decade or two. And also prices for cable and satellite TV haven't gone up nearly as much as overall inflation. So you pull all that together, and maybe mass transit's not an option. Maybe, traveling with gas and airfares is too expensive. Staying at home, watch it on your upgraded TV could be a perfectly fine substitute.
And Michael, as we've seen, a lot of people get used to a new normal after COVID. Do you think, though, when inflation starts to come down, that we will see the crowds perhaps coming back and being willing to spend more on these things that they enjoy for the tailgate?
Yeah, I think so. And I think you've even seen it despite the inflation. When I look at the areas of consumer spending that have seen the most growth in recent months, it is absolutely those service type categories as people get out and spend more time on leisure and hospitality and those kinds of categories that just didn't see the same levels of demand 1 to 2 years ago. And that's come to some extent at the expense of retailers and other physical goods, which have seen maybe more flatlining growth over the past several months. So I do think that would be the case, particularly if we could get some relief on some of this price growth.
All right, Michael Pugliese, thanks for being here. Appreciate the excitement for football season just around the corner, sir.